3 years ago, I lost money in the stock market. Not because of a crash, not because of bad luck, but because of 3 stupid mistakes. And here's the worst part. I didn't even realize I was making them. In this video, I'll show you the 3 exact mistakes that cost me money, the psychological trap behind each one, and the simple system I now use to avoid them. Stay until the end, because I'll give you a simple long-term investing framework that could save you years of frustration. Mistake number 1. I followed the hype. A stock was everywhere. YouTube, Twitter, friends. Everyone said it was the next big thing. I didn't analyze. I didn't think long-term. I just bought because everyone else was buying. And that's when I learned about herd mentality. The market is emotional. When everyone is greedy, we feel greedy. When everyone panics, we panic. That's called FOMO, fear of missing out. And the market punishes emotional decisions. Today, I use one rule. If I can't explain why I'm buying in one sentence, I don't buy. Long-term investing is boring, and boring is profitable. Mention passive index investing like tracking the S&P 500 by Standard & Poor's. When I panic sold, I believed something dangerous. I believed the market would never recover. But history says otherwise. Markets crash. Markets panic. Markets overreact. But over decades they rise. Think about this. Wars, recessions, financial crises, pandemics. And yet, the long-term trend continues upward. The problem isn't volatility. The problem is reacting to volatility. That's when I understood something powerful. The market rewards patience, not prediction. That's why diversified long-term funds, like those offered by Vanguard, are designed to ride through storms, not escape them. The second mistake that made me lose money was panic selling. The market dropped 10%, then 15%, then 20%, and every red number felt like a personal attack. I told myself, I have to protect what's left. I'll sell now and buy back lower. It sounded logical. It felt responsible, but it was fear. I wasn't reacting to data. I was reacting to emotion. And here's what most beginners don't realize. A loss is not real until you sell. When I clicked that sell button, I locked in my losses. The pain stopped, but the opportunity disappeared. Because a few weeks later, the market started recovering. Slowly, quietly, without me. And I watched it go up, without participating. That was the moment I understood something brutal. The market transfers money from the impatient to the patient. Panic selling doesn't protect you. It guarantees you miss the rebound. Volatility is temporary. Discipline is permanent. Mistake number 3. I tried to time the market. I kept saying, I'll wait for the perfect entry. I'll invest after the next dip. But the perfect moment never came. And while I was waiting, the market kept moving. I wasn't losing money. I was losing time. And in long-term investing, time is everything. Here's what most beginners don't understand. The biggest gains don't come from timing. They come from compounding. A small investment, growing steadily, over decades, becomes something powerful. But if you wait 5 years to start, you don't just lose 5 years. You lose exponential growth. Now, here's the simple framework I promised at the beginning. This is what replaced my 3 mistakes. Step 1. Invest every month. No exceptions. Step 2. Buy diversified assets. Step 3. Ignore short-term noise. Step 4. Think in decades, not days. That's it. No prediction. No hype. No timing. Just discipline. The stock market doesn't reward intelligence. It rewards emotional control. Avoid hype. Avoid panic. Avoid waiting forever. And if you stay consistent, time becomes your greatest ally. Your future self is watching. Make him proud.